Hey guys, welcome back to Reserved Investments on YouTube and welcome to part 3 of my 5,000 subscriber Q&A series. Much like Lamb Chop's Play Along, they just go on and never end. I'm sorry to tell you that, guys, but there's going to be a part 4. There's most likely going to be a part 5. And we're probably going to have to do a part 6 given how many questions we were asked. So buckle in and get ready. We're going to dive right into the questions. So first question. Hey, Sean, I have been speculating on the trading card market and have been doing quite well. So well, in fact, that my tax accountant was asking a lot of questions regarding the transactions. I'm currently doing this as a hobby, and my question to you is, what is the best business structure for buying and selling collectibles on eBay? Okay, you did not give me how much money you are making in gross. I don't need to know how much profit you're making, but how much money you are rotating in this business on either a monthly or a yearly basis, number one. And number two, you also didn't tell me how long you've been doing this for and how long you plan to do this into the future. One of my problems is, and I'm going to be 100% honest with you guys, if you log on to YouTube and you look at any of these hype-driven channels that are telling you how to make money flipping Pokemon cards, or oh my gosh, in the year 2021, you can make a fortune speculating and flipping Magic the Gathering cards online. Or, have you heard this one? Sports cards are hot. Learn how to make money flipping modern era sports cards today. Sign up for my channel and I'm going to show you how. Well, every single one of these videos that I unfortunately take the time to watch, all of them tell you guys to open up an LLC or an S corporation, or even in some cases, a C corporation, which I would never recommend for this type of tax structure and or business. Now, I know a lot of you guys, you don't know what an S corp is, you don't know what an LLC is, you don't know what a C corp is. That's fine. You don't have to hear my advice on this. What I am going to tell you is, though, it is very bad advice for you guys if you're making only a couple of $1,000s or a couple of $100 even a year, to the point where you don't know if you're going to continue this business. You don't know if you're going to even take it to the next level. If that's you, I would never, ever recommend that you go into the direction of opening up an LLC or establishing an S corp or any type of tax structure that is going to cost thousands of dollars potentially to set up. And then every year, not only are you going to have to file one set of tax returns for yourself, you're also going to have to file taxes on a regular basis for that business structure as well. That is bad advice. I don't even agree. There's a lot of people that have channels about investing in real estate, and they tell you guys, well, every rental property that you own, you should put under their own unique LLC or S corporation to prevent liability. Well, yeah, if you own a commercial office building where 3,000 people are going to work in every day, but if you're renting out a house, you don't need to put every single house that you own in its individual LLC or S corp to protect you from liability. I'm sorry, that's very bad advice that is going to cause an awful lot of people out there to spend a significant amount on legal fees, on tax fees, even setting up and maintaining those type of corporate structures. That takes a lot of time out of your day. I'm going to be 100% honest with you guys because I go through this. Now, what I am going to tell you is I would set this business up simply as a sole proprietorship. You are pretty much selling trading cards on eBay. In most cases, with a business like this, you're not going to get sued. You really don't have that much liability. So as long as you're keeping good records and you're filing what I call a Schedule C along with your tax form, if you don't know what a Schedule C is, it's profit and loss from business. That's pretty much all you need to operate in this type of business over the short term or even the long term. Now, this is where it gets interesting. Let's say that you're someone, you want to open up either a retail store or you want to start doing business with distributors. You want to try to become something like a Scott Pratt or a Rudy with Alpha Investments. If you get to that point, yes, I would behoove you at that point to at least sit down with an attorney and or a competent accountant and discuss the situation and say, hey, I would potentially like to go in the direction of an LLC or an S Corp. In my opinion, you're not going to go into a C Corp with this. And again, this video is beyond the scope of me defining all these corporate structures. All is what I'm telling you is at the point that you are at now, I would not recommend you go to the direction where you need to incorporate. That's all you need to know. That's a great question. Next question. Sean, do you see WATA-graded video games moving toward an established market, or do you think it'll stay speculative? You said that you think Magic and Pokemon would eventually become established, giving you're buying the right cards and or sealed product. Just wondering if this would apply to video games and with which certain ones. In my opinion, the market for video games, graded, vintage, or otherwise, is way too speculative right now. There's too many unknowns. With vintage Magic the Gathering and vintage Pokemon, believe it or not, I think those markets are better off being a bet that you want to take because they're more close to becoming established, at least over the next 10, 20, 30 years. And you guys do have decades or more to wait for a lot of these markets to transition to the established side of the trade. Just to put this in perspective for you, literally within the last few years, pre-1965 comic books made the leap from speculative to established in the overall antiques and collectibles trade. Pre-1965 comic books, guys. Magic the Gathering and Pokemon came out in the 1990s. We have decades to wait before they transition fully, if they do transition at all, to the established side of the trade. When you talk about video games are way too speculative at present time with too many unknowns. And what I mean by that is, are today's kids that are growing up on Nintendo Switches, are they really going to want to go back 10, 20, 30 years from now and buy a factory sealed copy of Metroid for the original Nintendo Entertainment System that came out in 1986 or 1987? In my opinion, the answer is most likely no, with few exceptions. And that's really how you got to play that market. You got to really be cautious if you are getting into the market for graded video games or even vintage video games. Now, to be fair, I think certain vintage video games, there's always going to be a market for them. It just depends on how much larger it can get and if it can maintain viable over the next 10 to 20 years. And that's really what the question is going to be. I don't think a lot of kids today, meaning kids in the year 2021 that are 10, 12, maybe 20 years old even, I don't think in the future they're going to want to own a physical copy of a lot of these games. They're going to want to just download it on whatever system is popular then, if we even have set consoles 10, 20 years from now. I think there will be some type of video game console coming out, obviously, from Nintendo, Sony, and or Microsoft, but I think it's going to be fundamentally different than what we're used to today in the year 2021. I really think, especially when we look at PlayStation 5 and the new Xbox, I think those are going to be the last generation video game systems as we know it. I really think the future is going to belong to digital downloads. I think what's going to happen is you're going to have companies like even Nintendo producing like a Nintendo Infinite console where you just plug it in. It may need to be upgraded, or you may have to buy a new console every few years, but you're just going to download the latest games, and you're also going to have access to the back catalog of Nintendo classics from years on ago. I think that's really going to be the future for a lot of these video game systems going forward. I honestly hope that's not the case because I do love video games. It's just not something I would ever invest in. I don't think it is investable just yet over the long term. We're still many years away from seeing if that's a viable market. Good question. Next question. Sean, just more curious on what your take would be on Otis. Their tagline is the stock market for culture, and I've seen some retro YouTubers promote it. You buy a share in graded collectibles, maybe not a big topic, but more of your take and maybe a PSA on if this is a reasonable investment or a scam. Well, I don't think it's a scam per se, but I've done a lot of videos on investing in fractional shares as it relates to the antiques and collectibles trade. If you want more info on that, simply go and Google the Merrill Lynch Athena Fund and watch how that played out in the late 1980s. I am not a fan of fractional share investing in the overall antiques and collectibles trade. I've done tons of videos on this. Go back through my back catalog and you can watch them all. They are very well worth watching. Sean, what would be your top 3 tips for investing in Lego? Okay, I always hate questions where people ask me to give them my top 3 or my top 5 or my top 7 or my top 10 tips, but I am going to try to do this for you. Number 1, with Lego, understand it is a speculative short-term product, especially if you are getting involved in any of the newer sets. I hate to say that. I know there's a lot of you out there that love Lego and you want to go back all the way to the 80s. You want to buy some of the castle sets, some of the space sets, and you just want to own them. They are bad investments, in my opinion. I'm going to be very honest. The kids that are growing up today, I cannot see somebody born in the year 2010 who's right now 11 years of age. When that person gets to 20 or 30, even if they want to collect Lego, it's going to be very doubtful that they're going to want to go back and collect sets from the 1970s or the 1980s. Also, you have to worry about Lego reproducing a lot of their back catalog of sets. They're doing this a lot lately with the Taj Mahal that was just recently re-released, and also even the one pirate set that they did re-release under the Lego Ideas line. So Lego is starting to get privy that there is a market for a lot of their back catalog of sets, and they are actually bringing them out into the modern realm, dusting them off and re-releasing them. So that is something that you need to be cautious of. So that's my first piece of advice for anybody investing in Lego. Number 2, I would also encourage you to take profits as soon as you can if you are investing in Lego. So if you paid $30 for a Lego set and it goes up to $100, if I was you, I would be sending all those sets either to Amazon if you use Amazon FBA to sell your sets through, or if you list them on eBay, I would be selling them as quickly as I can. I don't want to hold on to that product for the long term because it is speculative in nature. And by the way, guys, I also speculate in Lego. I make a lot of money on it. The other third piece of advice is I would honestly be cautious who I listen to. There's a lot of speculative channels on YouTube right now that deal with investing in Lego, or let's analyze the return on investment on this Lego set that's going to retire next month. Well, the problem is there's really no fundamentals to analyze the return on investment on a lot of these sets because they are simply that, speculative. So just be careful who you listen to on online forums, who you listen to on YouTube. Yes, there's a lot of great YouTubers out there. I'm not mocking any of them in this particular space, but what I will tell you is they don't have a crystal ball. Speaking of crystal balls, this brings us to the next question. Sean, you don't have a crystal ball. How can you teach this stuff on your channel? You don't know the future just like nobody else does. I really want to respond to this statement because I get this a lot. There's a lot of other YouTubers out there that will state in their videos, and again, it's too countless to name them all, I don't have a crystal ball. I don't know where the market's going in the future. And that's 100% correct, guys. I have no idea what the price of a lot of collectible currency, Magic the Gathering, Pokemon cards, video games is going to be in 5, 10, 15, 20 years when we look at those markets in a vacuum at a microcosmic level. Meaning I'm not going to be able to tell you what a first print factory sealed copy of Legend of Zelda from 1987, graded by Wata Games in 9.4 condition, is going to be selling for in the year 2041. I don't know. But what I teach on this channel is how you can better arm yourself to understand how these markets work overall. For instance, before I came on YouTube, nobody was talking about investor-driven markets versus that of collector-driven markets. Nobody was talking about mass-produced scarcity versus organic collectability. Nobody was talking about how to analyze the markets that make up the antiques and collectibles trade from a fundamental standpoint of, is this market established? Is it speculative? Or is it mature and sophisticated? I brought all that to the masses on this very channel. Now, where am I going with this? Once you start breaking apart these markets and looking at them for what they are, devoid of emotional attachment and or hype, you really start to see them in a new way. And once you start to break them down even further, you can get an idea, well, gee, it's probably not a good idea right now in the year 2021 to start buying up Beanie Babies, hoping that they make a comeback anytime soon in most cases. Now, again, few exceptions. Yes, there are some Beanie Babies out there that do sell for a premium on the secondary market. I'm not mocking you if you collect them. What I am saying, though, is when you look at the fundamentals and the dynamics of a lot of these collecting markets and you apply economics, finance, and business to them, you get a sense of clarity where you may not have a crystal ball. You may not be able to estimate, like, what's a 1896 $1 silver certificate in PMG 65 EPQ going to sell for in the next 5 years? I don't know. But I can do an analysis on what something like that has been selling for over the past 20, 40, 50, 100 years in some cases, and I can get an idea, oh, investing in that is probably better than putting my money in the Pogs or Power of the Force 2 Star Wars figures or even certain modern era comic books. So what I'm saying to you guys is there is a lot you can learn about these markets to the point where you really don't need a crystal ball. You just have to understand the fundamentals and you can make an educated guess as to where some of these markets are going to go in the short term and in the long term. Next question. Sean, could collectible markets trend downward just as fast as they have trended upward with buyouts and record auction results? What would a collectible market crash look like? Okay, this is what I don't like. A lot of people always use the term, quote unquote, crash. The term that you guys should be using is correction. All antique and collectible markets at some point go through a correction. They do not go up exponentially over the long term. It cannot happen. No asset class can go up exponentially over the long term, not even traditional assets. Whether we look at real estate, stocks, bonds, mutual funds, ETFs, even if you study gold and silver, any of those asset classes, they do suffer a correction from time. It just depends on how long the correction is and what the correction brings to that particular market. For instance, if there's a catalyst inside that market, like we often talk about third-party grading coming to comic books or coins or even trading cards, that acts as a catalyst where more people, now that those markets are subject to third-party grading, there's a lot of speculators, collectors, and investors that want in those markets. That's what happened with graded video games. You had WADA come on the scene, they manipulated the market, and a lot of people gravitated towards that market, and they said, you know what, I'll pay $50,000, $60,000, $70,000 for some of these graded video games. Well, there's no fundamentals that dictate that just because you have a first print copy of The Legend of Zelda from 1987, graded by WADA Games at 9.4, there's really no way to be able to determine if the demand for that particular item is truly organic or if it's speculative or if it's a combination of both or what is causing that particular asset class to rise at present time. So that's how you have to analyze these markets. So when we look at collectible markets, the word you should be using is correction. Now, if you want to talk Beanie Babies, Pogs, telephone calling cards that were collectible back when eBay came on the scene, those markets did crash pretty much. But even in this day, there's certain Beanie Babies, there's certain Pogs that do bring a premium on the secondary market. So there are people that still operate in those collecting categories, even though they did crash. But to answer your overall question, yes, markets can change on a dime. And a lot of times, unfortunately, for a lot of the starry-eyed speculators out there is no way to see this coming. The only constant in the antiques and collectibles trade, I've said this almost in every video, is change. And that goes for markets on the pop culture side of the collectibles trade, all the way up through the hardcore traditional antique asset classes like rare coins, currency, first edition books, historical documents, art, even traditional antiques. So you really have to study these markets over the short term and the long term to make an educated guess. Now, when I analyze these markets, I like to invest long-term, obviously, on items like this, on the antique side of the spectrum, because I realize there's more potential for capital preservation on that side of the trade than some of these more speculative collectible assets that are coming up the pike, whether we look at vintage video games, graded video games, certain trading cards like Marvel Universe trading cards or Garbage Pail Kids. So I like to hedge my bets properly. You also got to remember, guys, I'm 44 years of age. So that alone sets me apart from somebody out there who is taking a more of a substantial risk in some of these markets because he's 22, he's 23, he's 24, 25. You see the difference? So I hope that answers your question. But really, it's not always a market crash that you have to worry about. It's a market correction that could bring down prices 10 to 20%. And what do you do if prices stay there? If you paid $100,000 for your comic book collection and it loses 20% of the value, you just lost 20 grand. Well, if it stays there over the next 5 to 10 years, guess what? You don't realize it, but it's equivalent to getting slapped in the face every day with a wet noodle. Now, why is that? Because of opportunity cost. If you would have put that $100,000 in an S&P 500 index fund where you have compounding interest and also capital appreciation, your money would grow potentially exponentially. Now, are there corrections obviously in the stock market and the financial markets as well? Yes, but they recover better and more differently than that in the overall antiques and collectibles trade. And that's what a lot of the people who are speculating in these markets don't seem to understand. You guys really need to know both. You need to understand how the financial markets work, and you also need to understand how the overall antiques and collectibles trade works. I'm going to take a few more questions in this Q&A, then I am going to end it. Sean, do you invest in Magic the Gathering reserve list cards? Yes and no, off and on. I would like to get back into investing in Magic the Gathering reserve list cards. Right now, I just feel the prices are a little bit too frothy. If the correction hits the market in 10, 20, 30%, then I will gladly get back in. The house that you are seeing me film in right now, the down payment for this particular house came from the sale of a lot of my reserve list Magic the Gathering cards that were graded by PSA in 10 condition. I do not regret selling those cards at that particular time. I sold out in 2017 and I did very well. So I do invest in reserve list cards, just not at the moment because I think the prices are too high. Let's take another question about Magic the Gathering while we're on this subject. Sean, do you believe reserve list sealed product is transitioning to an established market and are safe long-term holds now that they're hot? And should I be selling into this market and putting those gains into an S&P 500 index fund? That's all up to you, my brother. I've said this before, reserve list sealed product or even non-sealed reserve list product, you literally have decades to go before we can determine if that market is going to transition to the established side of the antiques and collectibles trade. And I know a lot of people out there, they love to argue with me about this. Again, guys, to use this as an example, pre-1965 comic books, a lot of the key issues, literally within the past few years, just started to become known as established collectibles in the overall antiques and collectibles trade. Again, pre-1965. We are in the year 2021. Magic the Gathering came out in 1993. You literally have, in some cases, 20 to 30 years to go to even see if they transition to that side of the trade. If you are interested in Magic the Gathering, the trend is your friend. I would strongly advise you, if you do like Magic the Gathering, stay invested in reserve list cards. The market is not taking a downturn anytime soon. And if it does, and if you're buying for the long term, does it matter if the market drops 10 to 20% for a couple of years, if that's what you're trying to do? Now, to use the example that I used earlier on that comic book collection, yeah, if you have $100,000 invested in Magic the Gathering reserve list cards and the market drops 10, 20%, stays there for 5 to 10 years, you do kind of have a problem when you factor in opportunity costs. You will be losing money. However, if it's something that you believe in, you do you. It's not up to me to tell you not to do it. Now, if you came to me and said, Sean, I'm putting all my money in modern era Pokemon, modern era Yu-Gi-Oh, modern era Magic the Gathering cards, then I would tell you, you know what, you may want to rethink that strategy if you want to hold that stuff for 10 to 20 years. That's probably not going to work out to your benefit over the long term, in my opinion. Next question. Sean, can you comment on Marilyn Monroe having a resurgence of popularity in the hip hop community. In my opinion, I wasn't aware that Marilyn Monroe is having a resurgence of popularity in the hip hop community or any other community for that matter. Again, I've said this before, Marilyn Monroe merchandise, collectibles, photographs, and the like, unless if they are truly historic, like if you happen to find a photograph with her posing with JFK, who she rumored to have an affair with, that would be something that is extremely valuable. But your average first issue of Playboy or any of these other signed photos or photographs of Marilyn Monroe, in my opinion, are not a good investment because kids being born in the year 2021, they're most likely not going to care that much about Marilyn Monroe 20, 30 years in the future. And the people that do care about them, guess what? They're going to be 6 feet under. So that's really how I would analyze that market. I'm not a fan of Marilyn Monroe, just like my parents. My parents are huge fans of Lucille Ball. Well, I'm in my 40s. Yeah, I know who Lucille Ball is, but I would not be spending a ton of money on a signed photograph of Lucille Ball because younger generations are not going to clamor for that particular item. Now, I do have a crush on Hilary Duff. So it could be that I do want to buy a signed photograph of Hilary Duff. And I'm just kidding. No, I would not spend money on that. But overall, I'm just using that as an example to show how sex icons have changed throughout the years and why you got to understand that items and collectibles of that nature, the only constant is change every several decades because most people are not going to know, especially again, if they're born in the year 2021, they're not going to know who Marilyn Monroe was. They're not going to even be able to recognize Lucille Ball. Even Hilary Duff. Hilary Duff's getting up there in age. I got to say, she still looks great for her age. Believe me, I think that she's gorgeous, but she still is. She's probably, over 35 now at least, if not 35 already? Because I know that she's a couple of years younger than me. I know we're like a decade or more on the continuum. If I'm 44, she has to be close to 35, if not older. So that's my advice to you on these markets. This is going to conclude part 3 of the 5,000 subscriber Q&A. Let me know what you thought of this particular series in the comment section below. And part 4 will be uploaded to YouTube soon. Thanks for watching, guys. Have a great night.